Hello, everybody. Yours truly here, the Brockton Credit Guy, the author of #1 new release book on Amazon, Unlocking Your Credit, and the owner of Depina Credit Solutions. A quick disclaimer here before I start. The information that I provide on my channel is strictly, for educational purpose, entertainment purpose, based on my opinion, my own research, Obviously, if you're looking for legal counseling or financial advisor, you need to hire one. All right. So that being said, make sure you subscribe to my channel. Make sure you set the notification bell to all, like that. Any new video, any new information, YouTube will be able to shoot it right to you. Like that, you'll learn more about credit, finance, budget, investment, etc. Also, like and comment, because that's how the YouTube's algorithm will be able to calculate it and put it in front of people like you or me that wants to learn about finance and budgeting, right? So in this topic, I want to talk briefly about questions that I get a lot. Arthur, what's the key difference? What are the difference between the major credit reporting agent? Which one should I focus on? Which one is more important than the other? Like, basically, ideally, is like, which of the three major credit bureaus, Experian, TRANSUNION, Equifax, is more important? And my answer usually, I say it depends, right? And the reason why I say it depends is because depends what you're applying for, depends on the bank, depends the magnitude of the lending that they're giving you, right? If you're applying for a credit card or an auto loan or any specific loan, it all depends, because the thing is, you have to understand the three major credit bureaus. The three major credit bureaus are information data powerhouse, right? Basically, they collect as much information about you, about your behavior, about where you live, work, and things like that, and store it, and literally basically sell it to the lending institution that needs your information. And what FICO does, aggregate a score, based on what they need, right? So based on the product, etc. So they're a powerhouse, right? So when I say it depends, there's actually two scenarios, right? One, if you're applying for a credit card or personal loan, etc., right? They might look at one or two of the three major credit bureaus. If you're applying for a mortgage, they might look what they call tri-merger. Let me explain to you, right? So if you're applying for, like, say, a Capital One credit card, Capital One might choose only to get your report from Experian. So in that point, right there, in that instance, your Experian report supersede all the other credit reporting that's out there, right? Because they're literally laser focusing on your Experian credit report. So if I was you, before I apply for that, I would have asked, right, the company, any company that you're applying, hey, what credit reporting agency do you pull my report for? If they tell you TransUnion, Experian, or Equifax, then you want to laser focus, fix any issue, make sure that report is pristine, make sure there's no blemish, make sure that everything, your name, everything is spelled correctly, make sure all the account is up to date before you go ahead and apply. If there's any misinformation there, any incompleteness or error, you need to address it before you apply, right? So that's the scenario. Then the scenario with mortgage, which they're giving you ideally, 6-figure, 7-figure, whatever mortgage they're giving you, they're looking more into what they call tri-merger. They're looking at all your report, and they're looking at the last 5, 6, 7, 10 years of your report if they can, because they want to have a whole picture of your credit report along with other supplement information that they need to underwrite that loan, right? So that being said, when it comes to mortgage, you want to make sure all your credit reports are as accurate as possible. There was a study done by the consumer watchdogs, advocate groups, and things like that that 79% of consumer credit report contains error. Error done by human, computer, mistakes, etc., right? So it's in your best interest to look into those your credit report. This is what I in every video I make out there, or everyone that I talk to, I ask them, when was the last time you looked at your report? When you looked at it, do you understand how to read the report, right? Do you understand? Did you find the issue there? Did you address it, right? If you don't have credit, did you start building credit, etc. In my next few videos, I'm going to be explaining how you could build credit with no credit, right? How you could, which credit cards are better. So I have videos inside here in the channel that you could take a tour. But the thing is, when it comes to mortgage, they're looking at everything. They're looking at what they call tri-merger report, and it basically all the report combined together, kind of blend in together to give them a whole picture. But when it comes to like specific credit cards and things like that, they might use 2 out of 3, etc. So again, it's in your best interest to look at your report for error. This is what I tell people. It really depends, but you need to be proactive. Look at your report, address the errors on your report, minimize the amount of application you're putting out there for unnecessary credit, have mixtures of credit. Make sure your payments are on time, automatic payment. Make sure your utilization on your credit card or your revolving account, it's under 30%. Ideally, I tell my clients, keep it under 10%, right? Because right there, you're in the more healthy stage of your credit. Don't close accounts just because, make sure, especially account that you have for like since college days or for 5, 6, 7 years, that has a high utilization or low utilization, really doesn't matter. But, work with the credit card company and see if there's other options for you, because there's many reasons why, I hear clients say, oh, I'm closing it because they charge me $29 a year fee. I mean, think about the reason why you had that. So the question is, and the answer might be, like I said, depends. But what I suggest is that you're getting your credit in order just in case, because banks might use this month, they might be using, or this year, they might be using Experian to give you that credit card. Next year, they might change. They might go to Equifax, or they might go to all 3, or they might go to 2 out of 3. So you're not going to necessarily, play that game, catch me if you can, You might as well just make sure that your credit in general is as accurate as possible. Yes, there is errors out there. That's not your fault. You need to address it. The burden of proof is put upon you first. Obviously, you could reverse that burden of proof upon them. So hopefully this information this video explain, which one is important. My answer depends. Hopefully, you're looking at your credit and you're maintaining a healthy credit. But look through my video, subscribe to the channel. I have more and more video. I have dozens and dozens of video and dozens more to be uploaded in the next few days. So I want to make sure you're not missing out. Set the notification, like, comment. And if you have other suggestion about other videos I should put together, put in the comment below. But also grab my book, Unlocking Your Credit, at unlockingyourcredit.com. Learn more. If you're around, I could sign it for you. Thank you for your support. And love to hear back on your feedback. Thank you.